What
of
is a net
ArcelorMittal.
asset value?
Net asset value, it's basically the underlying, or rather the residual value when you take a company's assets and you take away its liability. So
liability being something they owe.
Something that they owe. Assets being something that they own. Liabilities being something that they owe. So if you take
with that definition for an asset, we definitely gonna be in trouble with the accountants.
Listen, whether you're an accountant
like
or not,
the conceptual framework doesn't allow for something they own. But for a layman's term, right? That kind of makes sense.
Yeah, that's what it is basically.
Welcome to the second episode of the Investment Candle. I think it's been a ride after the first episode, eh?
Yes, yes. Awesome.
So again, my name is Chipiwa. I'm not alone. I'm with the tech guy, tech investor.
Yeah, that's me.
So I think I would just like to first kind of thank the love that we've received. Like I think we've received so much love from the community when we put out the first episode.
Yeah, we did.
I don't know if it's the same with you. I think they enjoyed the conversation from my side.
It was fantastic, mate. Just the feedback, all the feedback has been uplifting, has been super, super positive.
Yeah.
And very inspirational and motivational. Like you get people that don't come from an investment background.
Yeah.
They were coming and saying, no, we need this. And it's fantastic. And we have our listeners and viewers to thank for that wonderful, wonderful reception to the Investment Candle podcast.
Yeah. I think the first episode, we kind of laid the ground to say, this is what we want to do and all of that. So it's time to kind of get into some of the meaty things that we had planned to do. So today we're going to talk a little bit about what to think about when you're actually making an investment or when you think investment, right? So I wanted to term it investment strategy. So like maybe just to start off, I want to pose a question to you.
Okay, let's do it. We're already getting into this thing.
I just want to pose a question to say, like when you're investing, did you have a strategy to say, this is my strategy overall, this is how I investing, etc.?
No, I did not. Not even close. I was never that sophisticated. I just invested in companies that I liked, companies that I knew. So, for example, my very, very first share was, I'm forgetting my very, very first share, which is actually a cardinal sin, because it's actually the first one. But like, no, to answer your question succinctly, I did not have investment strategy. My thing was that I know what this company does. It was Aspen. It was Aspen Pharmacare. Okay. So I read about them.
Quite a little bit of a difficult industry there.
You know what? Like if you go to whether a Pick and Pay or a Spa, and then you go to the medicinal section, and you look at the back of your medicine, what do you see? You see Aspen. So that's what I saw. So that's what I saw, and like that was the first share that I bought. And I think since then it's been one hell of a journey. And you? What did you have an investment strategy? Did you have some sort of a plan?
No, I think for me, when I started, I didn't have a plan as well.
Yeah.
It was just, I like the company. But I think I shared this in my journey that as time went on, I kind of developed this, I want to be a finance guy kind of analysis to say, okay, this is what I should look at, etc., etc. So I think that's when I started developing a strategy to say I'm gonna do small cap or large companies. Or
you were already dealing with caps.
And all of that.
You were already dealing with caps. Caps.
Listen, man. You know when you have a passion for something, right?
Yeah.
That you go to a greater length to actually learn about it, right? On how the JSE itself is comprised, right? So that's what I did. I went on to kind of, learn more about it. But when I started, I didn't have any strategy. It was just, do I know this company? Do I understand what they do? Yes. Okay, cool. Let's put some money in. Is it cheap enough for me to come in? Let's put some money in. It's always like that, right? But with that said, like I wanted to do we actually have time to invest, right? How much time is needed to actually invest, right? Because I think that's one of the things that we need to think about. There are people that actually do this professionally, right? But we're doing this from a side hustle perspective to say we want to build generational wealth as well.
Yeah.
But do we actually have time to actually make those investments?
Time is very, very interesting. It's a resource and it's not infinite. It's you're gonna run out. You don't have limitless time.
Yeah.
So like everything else, in my view, we don't have enough time.
Yeah.
Especially when it comes to stuff that we have to do in order for us to create some sort of a generational prosperity.
Yeah.
We really, really don't have time. So I think it also touches on the point that we mentioned in episode 1. Please go check it out. Episode 1, where we spoke about how important it is to start early. The reason why it's important to start early is because you don't have time. You know, we're going to get into such things as long term and stuff like that. And I mean, all that stuff. I mean, it looks good on paper, but it's relative. You know, your long term might not be my long term. This person's long term might not be that person's long term. So to answer the question, I think we don't have time, but that is more reason, more inspiration, you know, more motivation. That start now, because we don't have much time. You know, what's your take on that?
Yeah, I think it's it kind of brings me to the point that I wanted to raise. That when you're thinking about investing, especially in the stock market, right? It's a very information sensitive environment. Right?
It is.
So you need to think about whether you want to make short-term gains or you want to make long-term gains. Right. We used to call it avoid the market noise.
Market noise.
Because I mean,
I like that.
There's things that just happen today. You might find that there's an executive that got charged, say it is company X.
Yes.
That affects the stock, the stock of the company, right? The price of the company. And then is that sustainable? Is that long term? Does that really matter? Etc. like that, right? It's not something that you can actually predict. Right.
Can't do that. Yeah.
So that was my thing. Like, have you ever actually thought about, or did you do short-term gains and actually, we call it, maybe we can term it trading, right?
Yeah.
It's not Forex. Because I mean, traders, that's what they do, right? They look at the short-term movements and they actually even predict short-term movements. So is that something that you did as well?
Okay, let me not rush into a no. I tried it. Okay, back when I was still at UJ, I was at Res. There was a chap, which we're still in contact with. He was very much into trading, but I saw him do it.
Yeah.
It's from KZN, and he was always on his computer. So, you know, always on his computer, looking at line charts and seeing.
It always looks so cool, man.
It looks cool.
When they have their charts and everything.
It does look cool up until the point where you always see a person on their laptop. That's when it becomes like, okay, is this thing really, really cool? I did try it. And to be quite honest with you, I had a bigger, or rather, my mind wanted a little bit more. I wanted to be stimulated in other ways. So like life, especially investment life, it's quite big. You know, you could go on to events where you network, where you get in touch with industry people, you get in touch with the market participants themselves. And I wanted something that will give me a balance on how I should think about it, not always just have my face on the screen. But I just wanted to touch quickly on what you said in the beginning. And looking at short-term gains versus long-term gains. And I think philosophically, how I think about the long-term, of which I'm also going to ask you this, I think it's pretty interesting, is that those two, long-term and short-term, they don't have to be against one another.
Yes.
It doesn't have to be that way, because like I get the sense that if people are looking too much into the short term, automatically they're not looking long term, or if they're looking at long term, they're automatically ignoring what's happening in the short term.
No.
Long term is many short terms.
Agreed.
There has to be like a series of short terms, and then if you take space and you can just sit back and let time unravel, that's when now you have a long term. And I think it's okay for us, especially when we frame our discussion, to say that if we are talking about short-term gains, we are referring to actions that are taken now, ignoring the future repercussions. So your term, how do you think about long-term versus short-term? Like, I just want to get your understanding of how you think about the two.
Yeah. I think for me, how I think about the two is the short term. It's very unpredictable for me. There's too much noise that happened, and that you kind of need to anticipate to actually make some good money, right? And one, it kind of speaks to the very first part of this conversation that we don't have time to actually deal with the market noise to actually find the little pockets to actually make money.
Yeah.
Because if I know that there's certain things that are happening in the company, then I need to take a view on how this is going to affect the share price, whether it's going up or down, and then bet against and make some money if it actually goes in my favor. So I feel like that takes so much time to do that.
It does.
Right? I'm not saying it's impossible. There are people that actually make money in this.
It's true.
Right? That actually look at the short-term movements of the market and etc. and actually predict, okay, let's see if there's some differences where we can make money. Right? That's for me it's the short-term aspect is anything that is shorter than a month for me. I'm gonna invest in a company, I'm not looking at a month worth of return or growth on my investments. I'm looking at 12 months to 3 years to 5 years. That's what I'm looking at, right?
3 years to 5 years.
3 years to 5 years.
I see.
12 months is still a bit of a short period.
It's short,
But I think 12 months, it's actually even fund managers, they get rated on 12 months as well. Right? Because that's your year performance, right? That's what you made in that particular year. People are actually, if you're a fund manager, people are going to be like, okay, let's see how you grew my portfolio. If you're managing my money, I'm going to come down on you to say, in the 12 months, how much money have you made me, right? So although that's a short-term period, but it's still enough period to actually make enough money. That's in my opinion, right? To make money, right? But when I think short-term, I'm thinking a month. There are people that even think about a week. Say, okay, I need to put money today. In 7 days, my stock needs to kind of move, etc. like that. That requires a particular skill, in my opinion, to be able to discern the short-term noise.
And luck as well. I think, as much as how I think we try to tell ourselves how good we are. We do the most complicated of equations and algorithms and like, okay, this is what's going to happen. But I think a lot of luck also comes into it, where it's just like, it's good timing. And I think that's why as much as how I gave a whole spiel about how the long term is made up of many short terms, man, it's quite difficult to have a investment mindset which is predominantly short term. I think you can't do that. I think you are playing. I think you're using this word loosely. It's kind of gambling in a way. Like, I know it's a harsh term. It's quite harsh to say this, but it is what it is. I mean, probably people are going to come at me for that, but I mean, it is what it is. But having said all of that, I did make a trade that was definitely short-term driven. It was Ansela Metal. Ansela Metal, the steel manufacturer. It was listed on its Johannesburg Stock Exchange.
I really don't understand the steel industry that much, to a point where I feel like there's a lot of moving parts in that industry. But
you're right. You're quite right. There's a lot of moving parts. Did I understand how Ansela Metal works? No. No. But I did do accounting. And what I did was I just basically looked at the net asset value of the book. Of
what is
Ansela
the net
Metal.
asset value?
Net asset value, it's basically the underlying, or rather the residual value, when you take a company's assets and you take away its liability. So
liability being something they owe.
Something that they owe. Assets being something that they own. Liabilities being something that they owe. So if you take
with that definition for an asset, we definitely gonna be in trouble with the accountants.
Listen, whether you're an accountant
like,
or not,
the conceptual framework doesn't allow for something they own. But for a layman's term, right? That kind of makes sense.
Yeah, that's what it is basically. Getting a little bit more technical, that's the equity that you see in the books.
Yes.
Now, there's a difference between what you see in the books and what you see on the exchange, on the stock exchange.
Yes.
Because that price is determined by the movement of the price, obviously that supply and demand dictated by the market. And what's in the books, it's in the books.
Yes.
It's
facts.
Those are facts, not feelings.
Factor in people's feelings and opinions about the business.
Facts.
Yes.
So that's what I did with ArcelorMittal.
So you did you took your net asset value, you divided it by the number of outstanding shares in the business, and you came up with your value. Is that what you did?
No. I went to the balance sheet.
Yeah.
See, in fact, that's what I did. Yeah. So I took the net assets and I basically divided by the number of, oh my word, that big outburst of no. But anyway, so that's exactly what I did. And the price that I got at that time was about 6 Rand a share. ArcelorMittal was trading at about 2.50 Rand a share. It was so undervalued as per the book to the market price. And so I just basically took a punt. And so I realized those gains, it went up from 2.50 Rand up until 5 Rand. It was quite nice. It was interesting, and it made me feel good that, you know what, I can actually apply some of the basic things that I used at school, and I can actually realize again, short term. So where was the luck involved there? Because we even spoke about luck.
Yeah.
I mean, how long was it going to take for it to actually grow back to 5?
Yeah.
I had no idea. I just said that this thing is going to move to 5. I had hope. And like once you need hope, that's when I think now you're going the wrong way. But then that's the story I have as far as short-term investing. Do you have any short-term investing stories?
Yeah, I do. I think I do. I for instance, I made but for me it's not a positive one. Like
you lost money.
I lost money.
Interesting.
You know? I did put in on Steinhoff when it went.
Whoa.
You know, I think that at the time when I got in, it was about 4 Rand a share.
Jeez.
Right? And then I put in, I'm like, you know what? This money is the money that I'm willing to lose.
Okay. Very important.
Yeah.
Very, very
I'm
important.
Like, you know what? This money is that I'm willing to lose. I got paid. I've got a little bit of money. Let me put it in. My man. I saw that stock going down. 3.90 Rand.
Yay.
It went down to 1.50 Rand.
Whoa.
1.50 Rand. I don't know what Steinhoff is trading at right now.
Cents.
But dude, I lost money on Steinhoff, unfortunately. Because I was thinking, you know what? Maybe it's going to bounce back. They'll find some mitigating factors to kind of deal with the scandal that was happening.
Yeah.
But it just got worse, man. It just got worse every single day.
I can imagine. I remember that. I remember that whole saga. And I think in the future periods, we are actually going to do an episode just focusing on when to avoid corporate scandals, because that is very much part of our reality.
I think also just to think about whether or not proper assessment of corporate governance, right?
Yeah.
Because that's what really cost us the scandals that happened.
It did, and it's not just Steinhoff.
There's a lot of examples.
Plenty.
There's this one. I think it's a sugar one as well.
Tonga.
Yeah, even that one had a scandal. So you can say there's different examples in there that you can. But let's go back to the strategy.
Sure,
right?
Sure. Let's go back.
Does trading make sense for a young professional?
You know what? I think there has to be a certain characteristics that this young professional have, and I think it needs to be a part of them. You can learn. You can learn some of the things, but I think inherently you must have a certain characteristics in order for this to be a right fit. We are not saying trading is bad.
Yeah,
trading is totally legitimate, provided you have the license to do so. Especially when it comes to taking monies from outside investors. Okay.
No, but I was talking in the context of short term, right? Because if you're making investments for short term movements,
yes,
you're basically trading, right?
Yes.
So
yes.
does that actually make sense for a young professional? Meaning that you're investing on a stock today and expect some return in 7 days to a month, 3 months, etc.
Okay, a lot of bias on my side is going to come forth here because I'll basically speaking preference, but hopefully my response is going to be an informed response.
Yeah.
But there is definitely going to be a lot of bias in it.
Okay.
The objective here is to build wealth that can be enjoyed sustainably. And that key word being sustainable, I don't think it matches with short-term trading.
Okay.
Because then there's elements of time that goes in there. That goes into sustainability. So does it make sense? It's a difficult one just to say yes, it makes sense, or no, it doesn't make sense.
Yeah.
Ideally, I would not like the young professional, especially they are earning their very first salaries, that type of thing.
Yeah.
I would like for them to be a little bit street smart and think more long term.
Yeah.
And I think that's where it starts. So I think in my view, and I think the emphasis here has to be the word my, plenty of bias, but I have a bit of experience on both. I would like the young professional to think long term. I would like the young professional to say that whatever I'm putting in now, I would like to see it grow over the next 5, 10, 15, 20, 30, even 40 and 50 years.
Yeah.
So that's what I would say. It does not make sense to answer your questions as succinctly as possible. Yeah, that's how I'd answer.
I totally agree with that. I think it's one of the things that I get asked a lot, right? Do you think this share price is gonna grow in the next 7 days? I don't know, man. I don't know.
You said I don't know. Yeah.
Exactly. Because I mean, look, we're talking about a business, right? Do you know, even let's make it a real life example.
Okay.
To get a refund from a business, right? It takes a hustle. It can even take a month to get a refund. So how am I supposed to predict the growth of a share price within 7 days?
It's impossible.
That's impossible, right? But if I am actually predicting, say, a share price for a reasonable amount of future period, that I can do with some level of subjectivity, of course, to say, I think in the next 12 months or in the next 2 years to 3 years, 5 years, I think this company is going to expand to different geographies, etc., and derive my value from that, But in 7 days, that's when people's feelings are there, right?
It's true.
I can't predict people's feelings. I can't predict what the market is going to wake up feeling like.
Yeah.
But the true value requires enough time to be realized. That's what I think. So for young people or for young professionals to think that they can get short-term gains, it's possible, but I don't think it's advisable to think that you can invest for short-term. Right. And also, you don't have the time, man. Your boss wants your report in the morning and you're out there in the market because it requires constant entering and exiting of the stock, right? To actually make that money.
It's true.
So that's just my opinion. I don't think you have enough time to actually do that.
No, that makes a lot of sense, mate. That makes a lot of sense. I went to the Remgrow AGM on shares in Remgrow. And I think it's a fantastic company, man. I don't even with short term. In fact, here, how about this? When we're thinking about short term, even the word stocks and shares, for me, I associate those terms with short termism. When I think about long term, I think about companies. Okay. I think about them as companies. I'm investing in a company. I'm not necessarily. I might be buying a stock, but I don't. My mindset is not that I'm buying a stock. I am buying ownership in a company which will serve me Even if it's just capital gains or a steady flow of dividends, but this company is going to serve me over the long term. That's when I look at it as a company. So back to the story about Remgrow. I was at the Remgrow AGM last year. Fantastic people, wonderful people.
Rubbing shoulders with the billionaire.
Well, I mean, it is what it is. But yeah, so I was there, and they were kind enough to take my questions. That's where I met Johan Rupert for the first time.
Yeah.
Gave me all the time that I wanted. So when I met the other shareholders there, I found out that there were people that were holding these shares even before it was Remgrow. It was Rembrandt.
Ah.
It was started by Johan Rupert's dad, Dr. Anton Rupert. And they held those shares over the years. And they've seen some wonderful things, man. They saw the breakup of the company, obviously being to Richmond and also Remgrow.
Yeah.
Vodacom was spun off that. Eventfin was spun off that. Mediclinic was spun off that. They saw wonderful things, but the reason why they had so much success when it comes to all of that, they held on to their investment in this company. They had a mindset of, I want to hold this thing over the long term. And that's the same thing that I would say to any young professional who says that, what type of mindset? Chifewa, Nico, what type of mindset should we have?
Yeah.
A long-term mindset is definitely always going to be better because it has that element of sustainability, which is very, very important.
And time, right?
And time, yeah, and time.
There's this thing that we used to say in asset management that making money does not mean you're going to make money all the time, because your decisions are not always going to be right. However, my boss told me that your right decisions, just need to make enough money to cover and be above your wrong decisions.
Interesting.
About the market.
I like that.
Right? Because it doesn't matter whether you had 2 right decisions or 5 wrong decisions, as long as your 2, in terms of value, succeed or way above the wrongs that you've done and lost some money. That was like, that makes sense.
It's powerful even.
It makes sense because I mean, nobody can bid the market consistently. It just doesn't make sense. it just doesn't make sense.
Yeah.
But thinking of that, right? How do you think about long-term investing when you're actually thinking about investing in the company? Some people say that they want to invest in a company, say, for dividends. We already defined what dividend is in the last episode.
We did. Check it out.
Some people invest for dividends, or some people just invest thinking, this company is going to grow, and therefore ultimately the share price or the stock price is going to grow, and then I'll realize my value.
Yes.
Like, what is your strategy?
Okay. In the context of dividends, yes, it's very important. I know there's a school of thought. There's a school of thought that actually disregards dividends. Yeah. They don't look at it at all. And then some people in practice, not in just thinking about it, but in practice, how they do it, they just simply reinvest the dividends back into the share.
Yeah.
They don't want the cash flow.
Yeah.
So what is my strategy when it comes to that? It depends. I don't have just one strategy. Okay. I have a few strategies.
Okay.
Because I understand that as a Black person, and that's important as a Black person, in that as much as how we would like to think long term.
Yeah.
It's also a privilege because, I mean, there's also daily issues which are very much in the short term. In fact, not even short term, they're very much now.
Yeah.
So there is an element of my strategy that involves long term, but there has to be an element of short-term delivery in the form of dividends.
Okay.
I'll give you an example.
Yeah.
A nice company that I have, I'm going to make the example again with Remgrow, but maybe let me change because then I'm harping too much about this company.
We'll think you're promoting them.
I'm not promoting them. I just think that they know what they're doing.
Yeah.
For example, I'll give you one which is a blue chip company. Everybody knows it. It's got good capital gains, but it's also got a steady flow of dividends.
Okay.
Of high dividends. In fact, the dividend yield is actually in the double digits. Exaro. Now,
let's define the term dividend yield.
Dividend yield, so the formula of dividend yield, before I explain exactly what it is, it's basically the dividends per share divided by the share price.
Yes.
Yeah. So if you take the dividend, how much it is, and then if you take that and divide it by the share price, that's how much it's yielding.
That's what it is, right? We're trying to take this fancy finance jargons and we break them down so that if you're attending an AGM or you're attending something and you bought a share price and they talk about dividend yield, you're not gonna go blank and not understand what they're talking about, right?
Yes.
You'll thank Investment Candle that they helped you understand those terms and actually give life examples, right? To say, if I got paid 3 Rand per the share that I've got of Remgro, and then the share price is like 9 Rand.
Yeah.
3 Rand divided by 9 Rand, that's my yield.
Yes.
And that's part of the return.
100%.
Right? Yeah. But
that's important. Yes. I think just like trying to even break it down further into words and not necessarily looking too much on the mathematics of it all. How much is my dividend yielding relative to the price of the share?
Yes.
That's what it is. And it's very, very important. So going back to Exaro, high dividend yield, but it's also got a track record of doing good business.
Okay.
You've got a track record, you're a blue chip company. There is institutional money which is backing you. That's very, very important.
Yeah.
And you have a steady flow of high dividends.
Yeah.
I think companies such as that, I'm not saying that is the company, but companies that have those characteristics of steady flow of dividends, as well as a track record of performing well.
Yeah.
Now, if you can take the climate considerations of what they actually do, but we're not gonna get into that now. Then those are some of the investment vehicles which you can take and which they can satisfy the long-term nature, but also deliver for you in the short term, which is very, very important. As a Black person, I cannot stress that enough. We need both. We can't take one over the other. We need to marry the two to come up with a good investment strategy that's going to create long-term prosperity for us.
So you more towards dividends, or do you also look at the capital upside side to say?
Definitely. Most of the money that I've made have not been dividends.
Okay.
It's just been the most frequent that I've made has been dividends. The most that I've made has been capital gains. And with capital gains, there is no substitute. You have to look at long term.
Yes.
You really, really have to look at long term.
Yeah.
How do you think about your strategy between the short term and the long term?
I think for me is I'm probably one of the guys that don't worry too much about dividends.
Cool. So you're part of that group.
No, I love dividends. I'm not saying I don't rate them. I rate them, right? And obviously, I don't think in terms of, if I had to allocate my decision, right, I would say probably 15% of my decision will be influenced by whether or not this company has a track record of paying dividends. But my focus really is about the growth of the company.
100%.
I buy into the growth of the company. So if I think I do a top-down approach to say, okay, what's happening in the economy? What industry do I think is going to grow? 2, what is the company within that industry that I think is going to grow that will give me or capture that much of the growth that I want, right? And obviously, one of the big things that we must not forget is diversifying the risk, because you cannot just be investing on mining companies. You love mining companies. You cannot be just investing on mining companies only, because then you're exposed to mining companies. If tomorrow the governments decide to say they're nationalizing all their mines, or they're changing the licensing for all the mines, then you can lose your money.
It's true.
Because that is a big problem in the mining sector. You need that, right?
Yeah.
So diversifying your portfolio is quite important.
Yes.
You don't just look at one industry. You must look across the board, right? To actually diversify and kind of hedge the risk.
So
that's what I do. I kind of look at the the top approach to say
top down.
Yeah. I look at the economy, what's happening in the economy, which industry do I think is going to grow, and then what company will capture that growth, and then the timing now. At what point do I then enter?
Do you go? Because I go a little bit deeper as well. I like looking. So I see the cone going from top, and then going all the way down like a cone. I see that. Do you go deeper into the actual company itself? Like as your analysis, do you look at management? I know I do. Big thing in my analysis. I actually look at the integrity and the competence of the management. Do you go deeper than that?
Yeah, I definitely do go deeper than that. I think it's one of the things that, in the next episode or so, we must actually touch on extensively.
Yeah.
That value that I think the company is worth.
Yes.
It's obviously influenced by different aspects.
Correct.
Growth is just one of them, right? Major part of it, right? Because if I think the share price is going to grow from 10 Rand to 20 Rand, there must be growth that actually speaks to that they're either going to get new set of customers or enter into different geographies, etc. That will capture that growth, right? And also, in order to drive that growth, are management competent enough to actually drive that growth and achieve it, right? That's another aspect.
Wonderful.
And in terms of, are there limiting factors as well in the industry? Regulatory environment, is it enabling for them to do all those things? So I do analyze all those things, but as young people, right, that maybe we know some of our followers or subscribers are not financiers or people like that.
Yeah.
Do you think it's something that people that don't have finance background can do? Or is there a simpler way of actually looking at it and wait and say, I hope and pray that this stock is going to grow?
Yeah. I'm a Christian. I'm a church boy.
Yeah.
And I believe in those concepts of hoping and praying.
Yeah.
But I also believe in analysis. I believe in analysis, especially when it comes to investments. Just basically being wise and making good judgment based on facts that have been presented.
Yeah.
That type of thing. It's very important. So, but to answer your question, on should they? Did you ask should they or?
I'm asking if it makes sense for young professionals that don't have finance background. It's not only young professionals, but just someone who doesn't have finance background to be actually thinking about these elements. Do you think is that a big ask for them, or does it actually make sense?
Okay, this is where now my own philosophy is going to come to the fore again.
Yeah.
I really believe that, especially that method that you mentioned about the top down.
Yeah.
I think that is not necessarily meant for financiers and people who have been investing for a long time.
Yeah.
Those things can be comprehended and understood by intelligent generalists. Having a little bit of intelligence.
You throw this term around a lot.
I really do. I really believe, especially I've been looking at our numbers and looking at the people that have been subscribing. Thank you so much once again.
Yeah.
And I know a lot of them. And I'm convinced of their intelligence and their ability to comprehend and the capacity to basically take in information, process it, and actually make good judgment.
Yeah.
If you have that, you can look at an economy and see where is it going. You can look at a particular industry, seeing that, okay, this industry is actually going to prosper as a result of the direction which the economy is going.
Yeah.
You can look at the big players, or you can even look at players, not necessarily the big players, but you can look at certain players that are operating within that industry. Now, obviously, there are limits because the deeper you go, that's when now it needs a bit of technical analysis and technical know-how. That's when maybe there's limits. But a long, or rather a far-reaching journey which you have traveled as an intelligent generalist, you've traveled that journey. You're there. So it's just a little bit more which you're going to be limited. So to answer your question, I think yes, it's possible. In fact, I think it's desirable. You should want to get into it. But again, that's when I'm very, very passionate, particularly about the young professionals. Because this is possible. This is not a thing where you're looking at the computer every single time. So I believe that this is something that the intelligent generalist, particularly young professionals, can do.
No, I think I totally agree. It's not a matter of getting the exact mechanics.
Yeah.
Because I think you can take a view on the company to say, I think ShopRite is gonna. I love ShopRite a lot.
You do. You really do. There is no one in this world that appreciates ShopRite more than this man here.
So I think you can actually take a view on ShopRite to say, I think this company can grow because it's going to do this things and that thing, right? And that doesn't need a financier to actually understand that, right? It just needs you to kind of understand what's happening in the industry.
Yeah.
And it doesn't need to be numbers, right? You leave the numbers valuation to the guys that actually do that, but you just need to take a view on the business to say, I think this business can grow, or I think this business can pay dividends sustainably. It's those things that I think it can happen even though you don't have a background. If you're wondering if this is for you, if you've never seen or you've never actually taken the time to sit down and read financial statements, etc. But I think one can take a view on a company by just reading news about the company, etc., and go to look at, okay, what are certain things that this company is going to do? What is happening in this company? Do I think it can grow more than this? And also just looking at the previous share price. Some other people. Let me tell you a story.
Okay.
What I did, one of those days when I was in varsity, right? I went on and I used to just look at the share price for the past 10 years.
Yes.
Average the price out and actually see where it's at in terms of the average, right? And say, oh, okay. Has there been any fundamental changes in the business? For example, if the share price was 20 Rand and came down to 10 Rand, and I can ascribe that 10 Rand difference to say they sold a portion of the business, then it makes sense that the price went down like that. But if there's nothing too significant that has affected the business fundamentally, I used to believe, it can buy this stock, and I believed. I had hope. I'm like, this stock is gonna come back up. Let me put in my money. So it's one of the things that I did. But I think it's important to kind of spend some time to actually understand the business. Hence, I was saying it takes time to actually say, I'm taking a view on this business. Long-term investing is going to be very important if you want to build meaningful wealth, right? But if you want to be a trader, I don't think you can do it if you're working at the same time. That's just my view, man.
No, listen, I think we're together in that. And just to support you a little bit more on what you said about, has there been anything fundamental that has changed? That is what led me to the best trade I've ever made, which was Sasol. Literally, I looked at Sasol and it was dropping like anything.
Yeah.
And I asked myself, has there been anything fundamental that has happened? It was just a case of mismanagement over a project in Lake Charles in the United States.
Yeah.
The price of oil as well, but then that goes up and down. That's very, very fickle.
Yeah.
So nothing fundamental has changed. There was no corruption. There was no accounting irregularities. It was just something that could have been fixed.
Yeah.
And as a result, I made the best trade ever. And I know I like telling the story, but I would like to tell you that
Sasol made some millionaires.
Okay, well, we didn't get to $1 million, but
so this guy doesn't want to tell us that he made $1 million on Sasol.
No, I didn't make $1 million. I made 112,000 Rand.
That's a lot of money, man.
112,000 Rand.
That's a lot of money.
Yeah, just because I believed in the fundamentals, which did not change. And everything else was fixable. If you get in a new management team, you can absolutely fix that. Now, if fundamentally something was wrong, then obviously I would head to the hills. But then I stayed while other people would, they were scared. But that's what happened, and that's how much I made. I made 112,000 rand.
I think in the next episode, what I would like us to touch on is, at what price do you enter?
We're definitely gonna. That was one of the questions which I received privately as a text. And when should I enter and when should I leave?
Exit?
Yeah,
I think it's quite a difficult thing, right? I'm not gonna get into it a lot.
Yeah,
but I just want I want us to. I want to have a question, but already you have answered some of my questions. I have pop-up questions. I don't send this guy those questions because I know that he's gonna over-prepare for them.
I mean, hey, I'm a good. I'm an analyst.
So, first question, right?
Yeah.
What has been your best analysis for a company, and it came true?
Okay.
Was it management analysis? Was it a prediction of a stock going up? Was it a prediction of a stock going down? What has been a best analysis of a company and then it actually came true?
Cecil? That's the easiest one.
The one you made $1 million.
No, like this guy's it's gonna get me in trouble. I did not make $1 million, but it was Cecil. That was my prognosis, of which I proved it proved me correctly. I've made some money, so that's the best thing. That's the best piece of analysis that I've actually done when it comes to investing. Yeah, you?
I think my best one was ShopRite success on e-commerce.
Whoa.
With the 60/60.
This is interesting.
Like, one, I think given the customer loyalty that they have, right? And also the fact that they were doing so well in terms of capturing the upper market with their Checkers brand, I was just like, these guys know what they're doing. And with entering e-commerce, I think they're going to make a success out of this. And guess what? 60/60 is the best grocery online shopping out there.
Fantastic.
Yeah, I've never been so proud of myself.
No, fantastic. Absolutely. No,
I've never been so proud of myself.
Like, listen, like I'm always ready to give a person their flowers if they make a brilliant piece of analysis. Whether it comes true or not, I think that is important, but I think I like the thought process that goes into it.
Yeah.
And I think your thought process was correct. It was brilliant. It was well thought out. And for that, you deserve your gains.
But on the flip side, what has been your worst analysis of the company?
And this is a huge one, but I don't think I'm alone. I don't think I'm alone in this, really.
Yeah.
I basically underestimated the economic effects of COVID-19.
Okay.
And that showed on my portfolio.
Ah, I see.
So
got slashed, eh?
It absolutely it was hammered. It was it was absolutely smashed. I underestimated what coronavirus was. I really thought that it was something that could be contained at a regional level. But how it just spread so quickly, fine. It's a health crisis.
Yeah.
But then it graduated into an economic crisis.
Okay.
And then portfolios started seeing the color red from green. So that has been my biggest mishap. I understood. But I really don't think I'm alone there.
Yeah.
Especially with the, if I read a little bit more history, I think I would have been better prepared, especially for the bounce back, of which that was substantial. I gained a lot from the bounce back. So I did make up for my earlier mishap of not necessarily judging it quite correctly.
Yeah.
But I did judge the bounce back almost fully correctly.
Yeah.
Yeah.
But I think that's not a fault of yours, right? I mean, no one could have really quantified the impact of COVID-19 on businesses. I mean, that's when we also the one thing that people don't think about much is the regulatory environment.
Yeah.
Because what hurt the most was changes in regulation to say people must be locked in. The impact of COVID-19 was one of the things that nobody could have actually estimated how pervasive that is going to be, because the element of when a regulatory environment kind of gets impacted by that, then it becomes a major limiting factor on doing business, on analyzing certain things, etc. So it becomes very difficult in that respect.
I remember Capitec deep in the depths of COVID-19. Capitec was at 800 Rand.
Yeah. And I did invest.
You invested it at 800 Rand.
Yes.
Again, fantastic piece of investing. Did you see it out all the way up until 2,000 Rand?
Yes. Not 2,000 Rand. I sold out. I was scared. I sold out at like 1,600.
You doubled.
Yeah.
Come on. Come on. Like, listen to the investment podcast. Watch the investment podcast. the pieces, the golden nuggets that you're going to get here and apply it, which is actually segmenting nicely to the last bit of which, if you don't mind, I'll actually introduce it, is that we are going to launch a new feature.
Yeah.
Which is called check my portfolio check.
You know, when we should have those buttons somewhere.
Oh my word! And you actually played it up nicely for me. I actually destroyed it, but let's continue anyway. It's a portfolio check. So how it's gonna work is that the show, the Investment Candle podcast is going to create its own investment portfolio. 2 companies of my choosing, and then 2 companies of Shifiwa's choosing. Basically, we're going to build a portfolio, and every episode, we are going to check that portfolio. How's it doing?
Yeah.
And we are going to build it based on some of the principles that we speak about it here
in the podcast. Yes.
Yeah. It's anything that
I'm excited about this. You know, a lot of people talk about investing, but they don't put their money where their mouth is, right? This is exactly what we're trying to do. We're actually trying to say, guys, what we're talking about is actually what we do personally. We wanted to show kind of the growth of our own personal investment, but I was like, no. This guy has R1 million, so I don't want you guys to kind of get intimidated by the numbers when you see what Nico has done. But we're like, okay, let's put in a proper show portfolio that both us and you guys are going to see when it grows, the changes that we make and the decisions, the thought process behind it, so that we can start the investment journey with you guys and actually walk the investment journey with you guys, so that you can see what we think about.
Yeah.
It is not the Bible. It's just 2 mates that have strong opinions in the stock market.
100%. 100%. It's gonna be exciting. We're gonna put out lots of content, obviously, on our social medias. Please check them out on Instagram. And don't forget to subscribe. But like, you'll see it. It's check my portfolio, of which we're gonna be checking the Investment Candles portfolio.
Yeah.
If you want to join in, you can join in, and you can send us how your portfolio is doing as well. I think it can be fantastic for us to actually engage.
First, you can put it on the comments and tell us what you think.
Yeah. And tell us what you're thinking. You know, as much as how we are about the end results. We're about the results, but I think the process on getting there is also very important. Yeah. Bring us in. Let's chat. We are going to share a lot of our thoughts, what we're thinking, and please do the same.
Yeah. I think also the other thing, speaking of that, of sharing their portfolio growth, we are going to launch an investment challenge.
Yeah.
We're still thinking about the nitty-gritties around it, on how we're going to structure it.
Yes.
So there's going to be a prize. Whether or not that's going to be sponsored, we'll see. But we will have a prize that, you know, if you've been building the portfolio with us from a certain time when we launch the challenge, and your portfolio grows much faster than somebody else's portfolio, there should be a very nice prize for you. and we'll appreciate, because what we're trying to do is to get as many people into doing this.
Yes.
So a reward into that is really just an incentive for someone to get started,
100%. I think as a sign out, what is your takeaway from this podcast, from this episode? What is your takeaway?
You ask difficult questions at the end, my friend. Yeah. No, I think my key takeaway is that trading is incredibly difficult for a young person that has a 9 to 5. For some people, it's not 9 to 5. It's 9 until 2 a.m. I know my auditing people, my investment bankers, etc. It's 9 to 2 a.m. Even my doctors out there, they do long hours, and lawyers, briefs, all those stuff, right? But doing trading or investing for short-term gain is incredibly difficult. We kind of laid the analysis of what you should think about when you're actually doing long-term investing. We spoke about growth. We spoke about dividend elements into it. You're a dividend person. I'm hardly a dividend person. So all those kind of things. And in terms of where do you even start thinking about, okay, what's happening in the economy? The technology is advancing. Okay, what company can I pick within the technology space? And how can I actually assess those companies that can capture that that what's happening in the market to actually give me that. So those kind of elements, I think, that kind of give some color in terms of the investment strategy that we're trying to convey. I don't know what your key takeaways were on that.
First of all, that's powerful. That's very, very impressive.
Yeah.
I hope many people take that on board. I think my takeaway here is that have a mindset of long term while not ignoring what's happening in the short term.
Agreed. Yeah.
If you can marry the two, I think that's when you have something which can not only work for you over the long run, but then it can also serve you in your current needs.
Yeah.
Thank you.
I think that's beautiful, man. And please click like, subscribe, and thank you very much. We've got about, at the time we're recording this, we got about almost 150 views on our first episode. That is impressive. And thank you for the love. Please do click like and subscribe. I don't know what other thing YouTubers say. But from Nico and myself, thank you very much. We'll be bringing you more content on investments. Sign out.